Have you ever paused to consider the sheer political and, well, administrative nightmare involved in transforming a country the size of India? I mean, a federal system where the center and 28 state governments fiercely guard their distinct taxing powers.
Oh, absolutely.
And then you ask them to surrender those powers to a single, unified mechanism.
It's a monumental ask.
It's not just a matter of passing a law. It's about aligning, 24 fundamentally competing economic agendas, overcoming decades of historical mistrust, and doing it without descending into absolute political paralysis. How was the entire indirect tax structure completely overhauled?
That is the defining question of modern Indian fiscal governance. You are hitting on the core dilemma of managing a quasi-federal system with these deep resource imbalances.
Right.
And the answer wasn't found in a simple act of parliament or some, backroom political truce. It necessitated the creation of a very specific, a very unique constitutional body.
Yeah.
One that, really for the first time, blends national sovereign authority with mandatory binding cooperation from the states. This institution, which now decides the rates on everything from essential food items to luxury cars, is the ultimate practical embodiment of India's cooperative federalism in financial matters.
Okay, let's unpack this and pull out every single necessary technical insight. We are diving deep into the structure, the mandate, and the function of the Goods and Services Tax Council, universally known as the GST Council.
The GST Council.
For anyone preparing for the toughest policy examinations, studying governance, or simply tracking how modern India's economy is steered, understanding the structure and power of this council is absolutely essential. We need to know how it works, how decisions are made, and what it signals about the future of our federal structure. Welcome back to the Deep Dive. This comprehensive analysis is meticulously customized for you, the focused learner, prepping intensively for examinations like the UPSC, utilizing the foundational material of Laxmikanth's Indian Polity.
Specifically, we're in Chapter 47 of the 8th edition.
Exactly. We know your preparation requires clarity, analytical depth, and precise linkage to the Constitution. Before we jump further into the articles and the mechanisms, if you find this comprehensive and, highly useful content, valuable content that cuts through the noise and delivers only the essential analytical links, please know that your support is what makes this possible.
It really is.
We humbly ask you to subscribe to our YouTube channel right now. Liking this video and sharing your valuable comment helps us immensely to reach more serious aspirants, just like yourself.
And a special shout out, a huge thank you to all our existing paid members.
Yes, your ongoing support is absolutely essential for us to continue bringing you these detailed, quality deep dives. If you are capable, please consider joining the paid membership on YouTube to help support the creation of future in-depth resources.
And to assist your preparation further, just remember that free notes covering the core concepts, along with practice previous year questions, the PYQs that test your foundational knowledge, are readily available on our Telegram channel.
That's the free tier.
That's the free tier. For those seeking the most extensive analytical preparation, including premium notes, extra PYQs, and model mains answers that link these constitutional concepts to contemporary issues of federal governance, well, that advanced material is all available on our dedicated Discord channel.
But that's for our Legend YouTube members.
For our Legend YouTube members, do join there for the full preparation toolkit.
So let's set the mission parameters for today. We are focusing exclusively on the constitutional anchor of the entire GST regime, the Goods and Services Tax Council, which is housed in Article 279A of the Constitution.
And framing the relevance of this body is key. I mean, understanding the GST Council is crucial, not merely for, rote factual knowledge of Article 279A.
Yeah.
It serves as a necessary, practical, and contemporary illustration of India's unique and often tension-filled federal fiscal arrangement. This theme, the evolution of our federal structure, the devolution of financial powers, the nature of center-state administrative coordination, this is a theme that is frequently tested and requires deep analytical knowledge in the mains examination.
So we need to go beyond just the composition.
Far beyond. We need to understand the political economy of consensus that makes this entire thing work.
To truly grasp the constitutional significance of the GST Council, we have to start where India's financial architecture is laid out. The center-state financial relations before, say, 2016. It sounds like a bureaucratic concept, but The old system was structurally inefficient,
Massively so.
and it often fostered intense friction.
That inefficiency was systemic. The foundation of these relations is laid out clearly in Part 12 of the Constitution, specifically Articles 268 to 293, which deal with the entire spectrum of financial relations.
R12, got it.
And this arrangement has always reflected the complex duality of Indian federalism. You have a dual polity structure that, by design, leans heavily towards a unified economic space, meaning the center retains considerable financial levers.
Right. So while states are theoretically sovereign in their own designated spheres, financial dependency remains a hallmark of the system. We see this with instruments like grants and aid.
Precisely. The Constitution provides for unitary features, especially in financial arrangements that foster dependence. I mean, think about the system of grants and aid.
Okay.
The statutory grants under Article 275 are given on the recommendations of the Finance Commission, but then you also had the discretionary grants, which often used to go through the Planning Commission, and that reflected the center providing assistance based on, well, perceived state needs or even political priorities.
I see. So these mechanisms inherently reflect the center's superior resource allocation authority.
Exactly, a feature that states often resented, and for good reason.
But the real pain point, the one that really crippled economic efficiency, was the indirect taxation structure itself. We had these clearly demarcated powers union list for central excise, service tax, and so on, and then the state list for sales tax, VAT, purchase tax. But these divisions were economic chokeholds.
That's the core historical challenge that GST was designed to solve. Before GST, taxation powers were highly compartmentalized based on the principle of origin versus destination. The taxes levied by the center, like, say, central excise duty or service tax, were not automatically adjusted against the taxes levied by the states.
Like VAT or purchase tax.
Right. And this created the notorious tax-on-tax scenario, the cascading effect.
That the cascading effect, I remember this, it's where tax was paid multiple times on the same commodity at different stages of production and distribution.
Yes. It inflated prices artificially and made interstate trade unnecessarily complicated and frankly, inefficient.
So you could have a product moving from Maharashtra to Gujarat to Karnataka for sale.
Exactly. And imagine at every border, administrative friction occurred. Checkpoints, delays, complex compliance burdens, simply because the central and state tax nets did not talk to each other.
A completely fragmented system.
It was. And it hindered the fundamental vision of India as a single, unified national market. It distorted investment decisions, and it penalized efficiency.
So the solution required more than just swapping one tax for another. It required a complete constitutional and administrative reset, forcing the surrender of over a dozen central and state levies.
Things like central excise duty, service tax, state VAT, entry tax, luxury tax.
All of them. Into one pool, the GST.
And that required the highest level of coordination. You couldn't just rely on the good faith of the states or on Parliament passing a law and, hoping everyone fell in line.
It wouldn't happen.
It would never happen. That kind of joint overhaul where both levels of government permanently surrender their right to independently set rates for a massive swath of revenue, that required a permanent, mandatory institutional mechanism for ongoing coordination and joint decision-making.
And that's the vacuum.
That's the vacuum the GST Council was designed to fill.
Which leads us directly to the key legislative catalyst, the 101st Amendment Act of 2016.
Yeah.
And it's crucial we emphasize this. This was not merely a statutory tweaking of the tax code. It was a fundamental constitutional restructuring.
Absolutely. The year 2016 marked a watershed moment. The primary goal of the 101st Amendment was, at its core, to facilitate the smooth and efficient administration of the goods and services tax by enshrining the principle of consensus-based coordination between the Union and the states as a constitutional mandate.
A constitutional mandate, not just an agreement.
Exactly. It created the legal architecture necessary to ensure both the center and the states could co-govern the tax structure.
So for our learners, the key insight here is that this amendment paved the way for the single biggest fiscal reform since independence. By creating the GST Council, it permanently altered the relationship between the center and the states, specifically on taxation matters.
Mandating co-governance where once there was division based on separate lists. It shifted the fiscal landscape from compartmentalized federalism, where each side was solely responsible for its list of taxes, to a system structurally dependent on mandatory cooperative federalism.
And this required constitutional backing. Why?
Because without it, any state could legally refuse to harmonize its tax structure, immediately collapsing the whole reform. The political genius lay in making the consensus mechanism a constitutional requirement.
Let's nail down the constitutional specifics then. The GST Council's birthplace is Article 279A. Tell us about its establishment and how its authority is derived.
So the 101st Amendment Act of 2016 introduced Article 279A, which explicitly provided for the establishment of this body. Constitutionally, it is known as the GST Council, and it functions as a sui generis body.
Sui generis, meaning unique.
Unique, one of a kind in India's fiscal architecture.
And who actually brought it into existence? Was it Parliament through an act or the executive?
Article 279A is very precise on this point. It empowered the President of India to constitute the GST Council by an order.
By an order of the President.
Yes, and this is a critical procedural detail because it confirms the Council's status. Unlike advisory bodies created purely by executive resolution or even statutory bodies created by an act of Parliament, the GST Council is rooted directly in the Constitution itself.
Just like the Finance Commission or the Election Commission.
Exactly. This grants it constitutional authority, permanence, and a political legitimacy that no mere statutory body could ever command.
That constitutional root is the nugget of knowledge right there. It's not merely statutory. It is constitutional, designed as a joint forum of the center and the states. This designation confirms its functional core, consensus building.
Absolutely. Now we get into the structure. Since it's a joint forum, its composition is key. It brings together the financial decision makers from across the country. The structure is all about ensuring parity and representation.
Okay, let's detail that composition, as this is often tested in preliminary exams. Who are the main actors in this joint forum?
The structure is designed to reflect the federal partnership while, maintaining central representation.
So who's the chairperson?
First, the Union Finance Minister serves as the chairperson of the Council. This immediately grounds the Council within the executive framework of the Union government and ensures high-level political leadership.
Makes sense.
Second, the Union Minister of State in charge of Revenue or Finance is also a member. This ensures a dedicated focus on the administrative and technical aspects of tax implementation from the central perspective.
Okay, so that's the center's representation. What about the states?
Third, and this is perhaps the most crucial part for the states, the ministers in charge of finance or taxation or any other minister nominated by each state government are members.
So every single state gets a seat at the table.
Every state is represented. This body essentially becomes the collective sovereign authority for indirect taxation across the country. This ensures that state interests are directly represented in every policy deliberation, unlike, say, the Finance Commission, which acts independently and makes recommendations to the government.
So you have the head of the union's finances, plus a minister from every single state. This is essentially a joint parliament of finance ministers.
You could see it that way.
But having all these strong personalities in one room doesn't automatically lead to consensus. If the center proposes a tax increase and the states object, how is the deadlock broken? This is where the article's most innovative feature comes into play, the decision-making mechanism.
This is the crux of Article 279A and the single most important detail for understanding cooperative federalism in action. The Constitution did not simply mandate voting, it mandated a weighted voting system.
A weighted system.
Yes, designed to ensure that no single entity, not the center, nor a coalition of smaller states, can unilaterally dominate.
Let's break down that formula because it defines the entire balance of power.
The formula for decisions in the GST Council is this. Decisions are taken at a meeting by a majority of not less than 3/4, so 75% of the weighted votes of the members present and voting.
So a simple majority of 51% is not enough. You need 75% consensus. That alone is a high barrier to protect minority interests. But how are the votes weighted?
The weighting is where the federal balance is formally institutionalized. First, the vote of the central government is assigned a weight of 1/3 of the total votes cast.
1/3 for the center.
And second, the votes of all the state governments taken together have a weight of 2/3 of the total votes cast.
This is truly revolutionary. It means the center, despite having enormous legislative power, it cannot pass any recommendation by itself, even if all its members vote. It requires the support of states.
Correct. If the center, with its 1/3 weight, wants to pass a measure, it needs at least half of the state's combined voting power, which is another 1/3 of the total votes. Conversely, the states, even with their combined 2/3 weight, which is about 66.67%, they cannot pass a measure without the center's support because the threshold is 75%. The center's 1/3, or 33.33%, acts as a de facto veto.
That is the ultimate mechanism of mandatory cooperation. It forces the center to negotiate with the states, and it forces a coalition of states to negotiate with the center. No one holds an absolute veto, but no one can dictate policy either.
That mechanism is the brilliance of its design. It inherently balances the powers. Before 2016, the power to legislate on central taxes lay purely with Parliament and state taxes with the state assemblies. Post-2016, key decisions regarding GST rates, exemptions, thresholds, which are effectively high-stakes economic policy, shifted to this collaborative executive federal body.
GST Council.
Yes, the council doesn't just manage tax, it manages political expectations and financial fears simultaneously.
Okay, it sounds like cooperation, but let's introduce some analytical tension here. We call this cooperative federalism, but hasn't the GST Council fundamentally centralized the majority of indirect taxation power?
That is the central critique.
Hasn't it effectively eroded the direct fiscal autonomy and the accountability of individual state governments to their local tax bases?
That is the primary tension and the subject of intense ongoing debate. It's crucial for any mains answer. While the voting structure ensures the states collectively have power, the surrender of sovereignty is undeniable.
How so?
Before 2016, if a state wanted to raise revenue, its finance minister could propose raising the state VAT rate and face local electoral consequences. Now, all major decisions, rates, exemptions, thresholds are decided in a centralized forum.
So the states have lost that flexibility.
They've lost the flexibility to tailor their tax structures to local economic conditions or use tax rates as a competitive tool. The center holds the administrative key.
So the compromise is this. States exchanged individual autonomy for collective security and a share of a vastly more efficient, larger national tax base.
It's a trade-off that analysts often point to when discussing the strengthening of the union at the expense of regional fiscal experimentation.
And this is the perfect case study.
Precisely. This entire mechanism serves as a vital case study for analyzing the real-world challenges and successes of cooperative federalism. When you are asked about the evolution of federal fiscal transfers or the functioning of multi-layered governance, the GST Council is the perfect contemporary example. It showcases institutional innovation designed to resolve federal friction, but it also demonstrates the irreversible centralization of economic decision-making power.
Now let's move to the most practical aspect. What exactly does this powerful constitutional body do? Our source indicates it focuses entirely on making recommendations to the center and the states. It doesn't pass laws itself.
Right.
But its recommendations enable massive legislative and executive actions. How binding are these recommendations in practice?
That is another crucial distinction. Constitutionally, Article 279A states the Council shall make recommendations. However, politically and practically, these recommendations are considered binding because the very people who sit on the council, the union finance minister and the state finance ministers, are the same individuals who must then go back and ensure the passage of the necessary central GST and state GST laws in their respective legislatures.
So if they agree to a 12% rate in the council,
they are politically obligated to pass a law reflecting that 12% rate. It would be political suicide not to. That consensus translates a recommendation into law.
Okay, we can break the council's functions down into several critical categories, starting with the initial power of consolidation and merger.
Yes, this was the grand architectural mandate. The council was required to recommend the specific taxes, cesses, and surcharges levied by the center, the states, and even local bodies that would ultimately get merged into GST. This required comprehensive analysis and immense political negotiation.
Let's list some examples of the taxes that had to be consolidated just to illustrate the scope of this administrative task.
Oh, the list is long. On the central side, the key taxes subsumed were central excise duty, service tax, and additional customs duty.
And on the state side?
On the state side, it was huge. State value added tax, or VAT, central sales tax, purchase tax, entry tax, which was also known as octroi in some places, luxury tax, and even taxes on lottery and betting. The council had to meticulously decide on the fate of each, ensuring that the revenue stability of both the center and the states was preserved during the transition.
That decision was immense. I mean, imagine being a state finance minister having to agree to merge lucrative local levies like octroi or state VAT revenue streams you controlled completely into a single pool where your control became shared.
It demanded a high degree of trust. The council also had to recommend the specific goods and services that may be subjected to GST or exempted from GST.
And this function is ongoing.
Continuous and dynamic. They decide the rate slabs, the essential structure of 0%, 5%, 12%, 18%, and 28%. They also recommend the specific thresholds below which businesses are exempted from registration and tax payment.
This directly controls the tax base and rate structures. It affects every single sector of the economy. The political significance is enormous.
It is.
When the council meets to decide whether a specific sector receives a tax cut or whether certain commodities are moved into a higher slab, they are managing the political economy of the country in real time.
Precisely. The council's role is not just about historical implementation. It is about ongoing, real-time policy formulation. Any subsequent rate change, procedural simplification, or exemption is governed by the consensus reached in this council.
Given that states were asked to surrender their independent revenue streams, there must have been a massive fear of revenue loss, particularly in the early years of implementation.
Oh, a huge fear.
How did the GST Council handle that core financial anxiety?
This is where the third, and perhaps politically most necessary, function comes in. The recommendation regarding the GST compensation to states and the mechanism to finance it via the compensation cess.
The compensation cess. This was arguably the linchpin that persuaded many hesitant states to sign on. Why was this constitutional safety net required?
It was necessary because the shift was so unpredictable. States were guaranteed compensation for any loss of revenue arising from the implementation of GST for a period of 5 years.
For 5 years. Starting from when?
Starting from the date of its implementation, which was July 1st, 2017. And this guarantee wasn't just a promise. It was enshrined in the Constitution itself via the 101st Amendment.
And how was this compensation funded? Was it from the general tax pool?
No, and that's the clever part. The Council recommended the imposition of a separate levy called the GST compensation cess. This cess is levied on specific luxury and sin goods like tobacco products, pan masala, and high-end vehicles.
I see.
The revenue generated from this cess is transferred into a dedicated compensation fund, which is then used to bridge the revenue shortfall experienced by the states.
So the political deal was crystal clear. You surrender your tax sovereignty, we guarantee your revenue growth. I think it was benchmarked at 14% growth per annum.
That's right, 14%.
And we fund that guarantee by taxing non-essential or undesirable goods. This guaranteed stability for 5 years was the lubricant that allowed the mechanism to move forward.
Without that compensation mechanism, the reform would have collapsed before it even started. It's a perfect example of institutionalizing risk management within the federal structure. The GST Council designed and administered this entire safety net.
Let's return to our comparative analysis. How does the GST Council stack up against other major constitutional and federal bodies we study, like the Finance Commission or the Interstate Council? This contextual understanding is vital.
That comparison provides the ultimate context for the uniqueness of the GST Council. Let's look at the distinctions.
Okay, starting with the Interstate Council, Article 263.
Right. The Interstate Council, established under Article 263, deals primarily with general coordination. Its scope is vast, inquiring into disputes between states, investigating subjects where the center and states have a common interest.
So it's about resolving broad intergovernmental friction.
Exactly. It makes recommendations for better coordination of policy and action in general.
But the GST Council is laser-focused on one thing: fiscal harmonization.
Precisely. The GST Council is narrowly focused on fiscal harmonization and regulation of the indirect tax structure. The ISC is advisory and broad. The GSTC is, you could say, quasi-legislative because of the binding political nature of its consensus, and it's very specific.
Now, the Finance Commission, under Article 280, the traditional balancing wheel of fiscal federalism. What distinguishes its role from the GST Council?
This distinction is paramount. The Finance Commission has a fundamentally different and distinct mandate. The FSC deals with the sharing and distribution of the revenue pool.
The distribution, okay.
Specifically, it recommends the distribution of the net proceeds of taxes between the union and the states, that's vertical devolution, and the allocation of those shares among the states, which is horizontal devolution, and also the allocation of grants and aid.
So the Finance Commission decides how the pie is sliced after it has been created.
Precisely. The GST Council deals with the fundamental tax structure itself, the rates, exemptions, thresholds, and implementation methods. It determines the nature and size of the revenue stream, the pie. The Finance Commission then steps in to advise on the equitable distribution of that consolidated revenue pool.
So they're sequential and complementary.
Exactly, but their functions are separate.
It's an important nuance because the source material mentions the historical complication involving the Planning Commission and the Finance Commission.
Historically, yes. The FC's role was somewhat undermined or complicated by the existence of the Planning Commission, which used to control non-statutory or discretionary grants for development projects.
Which created tension.
It led to overlapping functions and tension regarding federal fiscal transfers. The abolition of the Planning Commission and the creation of highly specialized, constitutionally empowered bodies like the GST Council is a recognition that specific, complex policy areas like tax harmonization require dedicated constitutional consensus mechanisms.
Separate from the broader resource-sharing mechanism of the Finance Commission.
Yes.
So if we were to summarize the so what for the policy learner, why does the GST Council matter beyond just Chapter 47?
The so what is that the GST Council is arguably the most powerful institutional mechanism for intergovernmental fiscal coordination currently operating in India. Its existence and function directly translate into the success of a unified national market. It enforces policy uniformity instantly across a vast, geographically and politically diverse union.
And this directly links back to the analytical questions posed in the mains examinations, which require you to evaluate the strength of the federal system.
Without a doubt. If you get a question on the resilience and evolution of India's federal structure, especially regarding financial decentralization and accountability, the success or the ongoing challenges of the GST Council becomes your primary practical test case.
You have to talk about it.
You have to. You must be able to analyze how the 75% weighted voting rule has either fostered cooperation or led to centralization. You have to understand how this joint forum operates to manage the political economy of modern India.
And it's not just about rates.
No, the fact that the Council is also empowered to recommend measures to harmonize tax laws, procedures, and systems means it is constantly working to reduce administrative friction, a monumental task that affects every business in the country.
Let's talk a little more about that technical scope. The harmonization of procedures. It's not just about the tax slabs, is it?
Not at all. The procedural harmonization is crucial. The Council has the authority to make recommendations on, for instance, model GST laws.
Model laws.
Yes, this ensures that the CGST, SGST, and IGST acts across the nation all follow a uniform template. It prevents chaos. It also makes recommendations on the principles of levy and apportionment.
Which addresses what, exactly?
This addresses tricky issues like determining the place of supply, which decides whether a transaction is intrastate or interstate, and how the integrated GST, the IGST, is apportioned between the center and the destination state.
Very technical, but very important.
Critically important. It also handles special provisions, like recommendations for hilly or northeastern states, which might require tailored tax treatment due to geographical or economic disadvantages.
And finally, disputes.
And, of course, dispute resolution. Recommending the mechanism to resolve disputes arising out of its own recommendations or implementation. The very fact that they must formalize dispute resolution speaks volumes about the inherent potential for conflict in such a complex joint system.
The complexity of apportioning IGST revenue is a classic example of federal financial trust. Since IGST is collected by the Center on Interstate Supply, the Council is responsible for ensuring the Center correctly transfers the state GST component to the destination state.
It is.
If that trust breaks down, the federal structure itself is damaged.
Exactly. The IGST mechanism, designed to ensure that taxes accrued to the destination state, upholding the destination-based consumption tax principle, is purely administrative. It relies entirely on the technical rules designed and recommended by the GST Council. Without the Council, that administrative trust and procedural uniformity would instantly dissolve. The Council provides the ongoing oversight necessary to maintain the integrity of the entire tax net.
We've covered the constitutional establishment, the unique weighted voting mechanism, the critical functions, including compensation, and the analytical context relative to other federal bodies. It's clear that this is a system built on constitutional necessity and political consensus.
And its effectiveness depends on the continual willingness of the center and the states to negotiate rather than dominate. The 75% majority threshold ensures that even if a party controls parliament, they cannot simply steamroll the states on financial matters crucial to their existence. It's a constant reminder that in India, fiscal power must be shared even when the law appears centralized.
This has been a deeply analytical journey into the nuts and bolts of fiscal federalism. The GST Council is really the ultimate constitutional innovation for managing complexity in a dual polity.
In summary, the GST Council, Born out of the transformative 101st Amendment and housed under Article 279A, successfully managed to transform India's deeply fragmented indirect tax regime into a singular, cohesive mechanism.
A huge achievement.
It really is. It proves that even the most massive shifts in fiscal sovereignty can be managed through a cooperative constitutional structure where the center and states sit down as a joint forum, using that weighted voting mechanism to deliberate, negotiate, and decide jointly.
That structural precedent raises an interesting, maybe a provocative thought for us to reflect on as we close out.
Okay.
The GST Council thrives on this unique, consensus-based, weighted decision-making model. Does this system, a joint forum with representatives from every state, backed by constitutional mandate and requiring a high threshold, 75% for every major decision, does it offer a viable blueprint for solving other equally contentious center-state issues? For instance, those pertaining to volatile topics like interstate water sharing or complex resource allocation disputes. Could a similar joint constitutional forum with recommendations carrying such political and practical gravity accelerate national coordination in these non-fiscal yet critically important policy areas?
That's something to mull over as you continue to study the evolution of India's federal architecture.
Thank you for joining us for this comprehensive deep dive, generated specifically to aid your thorough and targeted preparation for the highest levels of policy analysis. Just one final reminder. If you appreciated the depth and focus of this analysis, please show your support by liking this episode and sharing your most valuable comment on the platform. It genuinely fuels our efforts to bring you this level of quality content consistently.
And remember, your free notes and practice PYQs await you on our Telegram channel. For the most extensive preparation, including premium notes, extra PYQs, and model mains answers that tie these concepts together, join our Discord community as a Legend YouTube member.
A huge thank you once again to all our existing members whose generous support makes these valuable resources possible. Keep diving deep into your studies, and we'll see you for the next deep dive.